Slumping consumer spending and a still recovering economy leading to lower expectations in Detroit. Ford says that total U.S. industry sales may not even reach the low end of what was expected this year. For more, we bring in Sara Eisen. She is with Ford's chief economist at the National Association for Business Economics annual meeting, and that is in Dallas, Texas. Sara.
Good morning, Deirdre. And Ellen Hughes-Cromwick, the chief economist at Ford, woke up very, very early here in Dallas to talk to Bloomberg this morning. When you look at the challenging outlook for auto sales, what is the number one issue that stands out that makes analysts keep lowering their forecasts from here?
Well, Sara, thanks so much for having me on. Globally, vehicle sales have actually done fairly well this year. We're estimating somewhere between 75 and 85 million units, and that's up from 74 million units last year. Now, recently, because of the Japan supply disruption, sales, as you know, is softened in the U.S., but also in most other markets. We have seen some recovery in the last couple of months, and we do expect, with inventories coming back, that sales should improve somewhat. But we had said at the beginning of the year, at least for the U.S., we would average somewhere between 13 and 13.5 in terms of overall sales, and we're, just a tad below that right now.
So when you go in and meet with the bosses, Alan Mulally, and he asks you for an outlook on consumer spending, the macro economy, what are you telling him right now?
Well, we have a great team at Ford, as you know. We all work together on looking at the outlook, and specifically right now, as you know, through July, consumer spending was up about 2.3% on a year-over-year basis. But real incomes are not growing very strongly. So we're pretty sober about the outlook, and we really do tie production to demand conditions that are emerging. That's one linkage that we know works for an operating company.
When you hear some of the most well-known economists out there, Nouriel Roubini, and even others that are not as much of doomsayers as he is, say more than 50% odds right now that the U.S. goes back into recession. Do you agree with that?
Well, the unemployment rate's above 9%. And as I mentioned, consumer spending is very weak. So I think, in some respects, recession is a very technical term. We look at the reality of what the data are showing us right now, and it's very clear that we're in a weak situation. There isn't really any cyclical thrust in today's environment.
And what do you need to see? If there was one thing that Washington could get its act together and pass, what would you like it to see?
Well, policymakers really have to step up to the plate with a lot of leadership and be very proactive. The economies globally do need support at this point, and we need to have a coordinated, very decisive policy.
Stimulus?
To ensure, and again, stimulus is a very technical term as well. We need to have a combination of policies that really do address the challenges that we face. And working together, I think, is very critical. In the U.S., job support, housing, infrastructure, I think, is very critical. And then finally, focusing on reducing the cost of doing business. And here in the U.S., that means anything that we can do to improve competitiveness will be good for consumers.
The president's $447 billion plan that he laid out last week, does it make you optimistic? Will it go a long enough way, if it should pass, to helping create jobs when you look through your lens at a big manufacturer like Ford?
Well, again, I think a lot of the policy proposals do address some of the critical elements that are challenges in our economy. So it's moving in the right direction. I think the relationship between housing and confidence has been a core problem that really has not been addressed adequately, and we really have to face here in the future.
And I just want to ask you about Europe, because front and center in investors' minds, how big of a risk is it, do you think, for the outlook on consumer spending in the United States recovery?
Well, again, we're looking at a situation in Europe where not just the periphery is weak, but now, as you know, in the second quarter, especially consumer spending in France really took a hit. So the situation there is very sobering. And again, you know, the policy leadership is absolutely critical to get us out on the right step here.
Are we looking at a global recession?
Well, I
know you don't like that
again,
word.
No, yeah, because I think it's very general. Again, you know, looking decisively at the data around consumer spending, and there we really have seen just relatively depressed spending environment.
All right, thanks very much, Ellen Hughes-Cromwick, the global chief economist at Ford.